All right, we look to be all good. Richard, you're very welcome for another episode of Kickoff Sessions. I'm really excited for this. I've been so interested in China and payments for years. Really been fascinated by like China because of their economy, what they're doing in tech, just what they're doing along, in all different aspects of their economy. And I've also been interested in your work because you've really been documenting it at the forefront, really, because we hear it at the tail end, and I would have seen a lot of your work in university, which is where I first touched base, and that's where I would have seen like the kind of step into fintech into China and got my hook onto it and what you really liked. So that's why super excited for today, and you're very welcome.
Well, Darren, it's an absolute pleasure to be here. And I was so excited when you told me that you started interacting with my LinkedIn posts when you were in university. And that just makes me, as an author, somebody who writes stuff, just feel so great because I'm delighted to have had some small influence in helping you get turned on to China fintech. And yeah, I live in Shanghai. For everybody out there, I'm living in Shanghai. I'm coming at you right now from my home in Shanghai. And yeah, I use China fintech and experience it every day. So it's not sort of theoretical to me. It's real world. And that's how I got talking about it so much on LinkedIn. And that's how I ended up writing the book that, for those of you who are not on a podcast, but on video, you can see the book Cashless over my shoulder. And Cashless was written because basically I'm living in this world that's super high tech and what I always say is about 10 years ahead of the EU and the US in how it uses fintech, how it pays for stuff, how digital interacts with our lives. And I'm using it, and it inspired me to write a book because whenever I go back to two homes, I have a home in Italy where my family comes from originally and another in the US. Whenever I go back to either, I'm left saying, wow, we're really so behind over here. Why can't I pay for this like I do in China? Why isn't it that easy? It should be. And that's what made me write Cashless.
And it's awesome because it goes back to this simplistic version of the payments in China, which I think is so cool. You have QR codes, you have just basic payments, and that's what I really want to get into. But I always thought about it from an Irish sense too, because in Ireland, where I'm based, we have like really, really broken systems of payments. And that's where the neobanks have come up and really like excelled and taken hold of that market because traditional retail banks offered 4-day settlement, 3-day settlement, and you go to the States, there is none of that. My girlfriend's based in America originally, and they don't have tap, they don't have this. It's all chip and pin. So to see China so far ahead is always so interesting. And even your book that I'm looking at right now has a QR code on it, and even at that is just awesome. So at the beginning,
I can't resist. For anybody watching, there was a small picture of the book, but now there's a big one. And I used the QR code right in the center of the book. And if you go to any picture, perhaps the picture is big enough here, but you can go to a website that explains what the book is about. And, it's all about QRs and it's all about simplicity. It's all about China started payment from, what is it? Keep it simple, stupid, KIS, the KISS approach. They wanted to keep it as simple and as cheap as possible. And most importantly, they went to QR codes because they wanted to make sure that it was financially inclusive, meaning that everybody. So it's 2014, WeChat and AliPay launch. They launched using QR codes, which meant that anybody cell phone could use it, right? Anybody who had a cell phone with a camera in it was welcome. The cheapest Android phone, which on the market those days was around 50, 75 US. Now it's even cheaper, but right? But now compare that with 2014 and the launch of Apple Pay. Now, for the record, for anybody there, I love Apple. I got a lot of Apple. I'm not complaining. But when Apple Pay launched in 2014, what did they require? Well, they launched Apple Pay with the new 6 in 2014 because iPhone 6 was the first to have NFC near field communications built in. And Apple Pay was built on near field communication, meaning you wanted to use Apple Pay, you had to buy a new phone. Everybody who had iPhone 4, 5, whatever, forget it, you were shut out. So the fundamental way that the WeChat and Alipay looked at payment here was to say, how inclusive can we make this? How can we make it so anybody with the worst cell phone, worst smartphone that exists can use our systems? And that's what was going on in their heads to make WeChat and Alipay take over the country and help China go cashless. It's obviously not fully cashless, but for all the big cities, I walk around without cash for years now, and most people do. We just don't even bother having cash in our pocket.
And why is that? Why is it that Apple look off perspective of exclusiveness, whereas China looked at inclusive and they wanted to bring everybody into this payment ecosystem, make something that was scalable, make something that applied to the masses, whereas people that were late to the market, Apple in particular here, often looked at people of pushing people out versus including them, which then you got to another scenario whereby uploading cash from different banks, some merchants weren't able to be accepted onto Apple Pay. And then there's a bit of a disconnect.
Oh, yeah. Look, completely what was going through the mind of the guys at Apple who were responsible for their payment systems in 2013 when they designed it, or 12, a couple of years. They were designing this thing years before it launched. So I can't know what was going in their mind. In part, they claimed at the time, and some people made the claim, that NFC payment was more secure than QR codes. And there might be some truth to that, but not really, because QR codes evolved and they stepped their security up through all kinds of bells and whistles and stuff that you could do to make QR codes only work for 10 or 15 seconds. They're not like a QR code. As far as your phone goes, when you use WeChat and Alipay, the payment code, swipe this and I pay you, it's volatile. It goes away after, 30 seconds or whatever, and you have to get a new one. That's one of sort of the security measures. So in the early days, perhaps Apple wanted to press for security, but I'm now going to say something perhaps not so kind. They wanted to make money. For them, it's all about, hey, we need, and this is going to be controversial, I apologize. It's all about getting middle-aged white males who are super techie to spend more to buy the latest and greatest stuff. That was their target market. Let's get people to buy iPhone 6. We'll build this feature in to get more people to convert from iPhone 4 to iPhone 5. And, WeChat and Alipay both went for free services. Remember, there is no cost to payment in China. So when you use WeChat and Alipay, it is free service. And it's immediate free payment. So when WeChat and Alipay looked at this, they said, well, in order for us to make any money on this, we have to build ecosystems, have to build partnerships. We have to give people something more. Payment is going to be essentially free. And they said, well, we need volume. The only way you're going to get volume is to get everybody with an existing phone signed up to this. So that's in my view what was going on. And I don't want to say bad stuff about Apple, but they're in the business of selling new stuff. By the way, they're a hardware manufacturer. WeChat and Alipay have one thing: software. Their goal was to make it work on Android and, of course, on Apple products. Whatever phone you got, they wanted to make it work. So that was, a difference in where they were coming from.
And that's the difficulty in like these tech stacks, or how these software like products are built. So they have to cater towards iOS and Android now, and they have to be super scalable. So all of that evolution that happened in China has now made its move into Europe. You have this very competitive fintech space, which is great for the consumer because we have these super low transaction fees. We have great volume going through there, and they're offering these awesome services. Like people these fintechs now can offer pretty much like an all-inclusive like life like service where you have your insurance, you have
Yes.
everything included, which is so great. So, but China's been at the front of all that. So where do you see the next wave, which is again the central bank digital currency, which you discussed at length previously, and where is at the next stage possibly for European or US fintech?
Sure. Well, okay. So let's put it in context. Let's sort of give people a timeline. For China, at least, in 2014, WeChat Pay and AliPay launched. Those are two companies that provide corporate payment, okay? And they were tremendously successful. How successful were they? It's mind-blowing. So I hope you're sitting down when you're listening to this. In 2019, the stats for digital mobile payment mobile payment volume in China were $52 trillion US, 3.7 times China's GDP of 14 trillion. So what it shows is payments cycling through, going around and around and around in the system. Now, okay, so China's GDP, you can't relate to that. Okay, fine. It's 2.5 times the total credit card use in the planet.
Wow.
So it's mind-blowing. Look, it's mind-blowing because China's big, okay? So China's a really big country, 1.4 billion. It's really big because this concept of payment being free, you paying me paying the other person, my buying the coffee shop putting the money back in the bank, each one of those is a payment. And each one of those can be done with mobile now. So you've got this concept where, it's not just the price of the coffee. You buy coffee. That money for coffee has been moved 4 or 5 times from one bank account to another, from one person to another. There's multiple steps in paying for that coffee, or multiple places the money from that coffee will go. Mm-hmm. So that's how big it is in China. Now, next step. Ready? 2014, the same year that AliPay and WeChat Pay were launching, the People's Bank of China, the central bank of China, said, hey, we wanted to develop a digital currency. They saw what was going on with cryptocurrency. And they said, look, cryptocurrency, we're not a big fan. Anybody who's following China knows that China's been blocking Bitcoin. They're not a big fan of Bitcoin right now. Okay, so that's out. But the thing is, they certainly liked the technology. So back in 2014, they started looking at Bitcoin and cryptocurrency, and they said, hey, there's something here that we can use. So they built off that technology, and they had a very long 2014 to 2020, which is when they first started to put the central bank digital currency in trials. They took a long time to design it and roll it out. And basically what they're doing is they're taking the next step. Okay, so we've got WeChat and AliPay, big numbers, big mobile payment, really exciting. But ready? Now China is taking the next step and going further, which is to say, well, it's not enough to just use digital money on WeChat Pay and AliPay. We're going to make all money digital. So things that weren't so now, okay, I pay my bills, I do all kinds of stuff with digital, right? I don't really touch money. I'm still on WeChat and AliPay. But if I'm working, my salary is paid to me into my normal fiat bank account. Okay, you're working for a state-owned entity, a state-owned, bus company or whatever, right? Now, in the future, you're going to be paid digital currency directly into directly. You're not going to have it go into an account. So it's not about stealing from AliPay and WeChat Pay. They've already digitized a lot. That's great. Now it's taking digital payment, that next step, to stuff that isn't digital now, but will be in sometime in the future. And it's really exciting times. And now I'm going to finish because this is a really long answer. I apologize.
Don't you
That
worry.
technology is coming to you. Right now, this week we saw the European Central Bank look at a 2-year research program to design a digital euro. So it's coming. We all live in what I call we all share a central bank digital currency future.
And when you say like digital currency and how it's going to be formed together, and especially because it was looked at from a crypto perspective and originally, how is the technology built for this? Like, is it based on a blockchain? Is there some sort of transparency there, or is it kept by that country? So if it is China and it's their own central bank, or if it is the EU or Sweden has also looked into things, and same with Canada, is it going to be their own like tech structure or tech stack? Like, how does it come from a technology perspective?
Sure, absolutely. So let's make a distinction for people out there. Okay, first thing, cryptocurrency, Bitcoin, Ethereum, great stuff. If you love it, I love it. I'm sort of neutral, on it. All right, but basic idea is cryptocurrency. The value is determined by what people believe it should be worth. Fine. All right, that's one side of the world. Now, ready? Central bank digital currency, also a digital currency, as the name says, but this time it's central bank issued, meaning that the central bank that issues this, which is a 100 RMB note I'm holding up for those who are watching or listening to the podcast, right? The central bank that issues this is also issuing a digital currency, which is a digital equivalent of the paper money. So cryptocurrency, value determined by what people believe it's worth. Central bank digital currency, its value is 1-to-1 with the paper money. So it's not jumping up and down. If you have a digital euro, what's it worth versus a US dollar? Well, the same as the exchange rates in in the newspaper for fiat currency. All right, that's the basic idea behind it. Now, technology, ready? So cryptocurrency is 100% built on blockchain technology. Blockchain is really great. Love blockchain, no problem. Central bank digital currency may or may not be built on blockchain. Why is that? Blockchain is great tech, but it has one problem. It's not really fast. So in other words, the number of transactions per second that you can put through a blockchain is limited because it's computationally heavy. I think it's something like 7 transactions per second for Bitcoin. 7 pops out. I have to check that number, but it's a very low number for something like Bitcoin, and progressively higher when you get to things like Ethereum, which can go to several thousands. All right. Okay. China's got 1.4 billion people. During their version, their peak sales day, which is Singles Day, 11/11, 1111, all ones, right? That's singles, right? That's like the peak shopping day, the Christmas of China, if you will. During that day, AliPay processed 500,000 transactions per second.
What?
Mind blowing.
I thought you were going to say in the day. I was like, oh, in the day, that's pretty good.
No. They peaked at 500,000. Now, let's give this, again, perspective, right? Everything is relative. You say, well, that's a big number. How big is big? They were doing 500,000 transactions per second. The Visa network, Visa credit cards, is built for depending on who you read, between 50 and 70,000 transactions per second. So add a 0 for AliPay. So China's really big. And when the central bank looked at building this, they simply said, we like blockchain, nothing against it, but it can't handle their design specification, which is minimum 300,000 transactions per second, because we're a big country. So that's why China's central bank digital currency didn't go blockchain. Okay. And one other thing to remember for those out there who are saying, well, Ethereum 2 can hit 200 or 300 or more. You're right, but Ethereum 2.0 wasn't out in 2014, 15, 16.
And it
And if
still
you're a
might not be
central
out
bank,
for
still
many
not
more
out, right?
years. Yeah.
So it's going to be a while. Okay, so it's imaginary software, but somebody says there's other blockchain protocol that can. That's great. But if you're a central bank, do you build on the newest, what I call bleeding edge technology, or do you build on stuff that you know that works? And that's the reality. At least when China was building its central bank digital currency, there was no blockchain that was going to meet its requirements. And arguably there still isn't, but that's a fine point for debate with blockchain fans, which I love. I'm a blockchain fan.
Exactly. And that's why I said it's quite interesting because like from a blockchain perspective, if you're meant to improve like the security and you're meant to try to improve like the data privacy and whatnot from having like, immutable transactions, if you're having a lot more, security. So depending on which protocol you're executing, my alarm bells are going off in terms of security for the central bank digital currency. So China have been known to get themselves into some murky water in terms of data. And what I'm kind of wondering off this is that do you see any, security issues if you compare it to something that was on a blockchain, or if it was even on a blockchain, then would there be essentially data issues? So like, how are they kind of improving the trust and really gaining like the support on a local level as well as internationally, if this is going to be used at an international scale? We can get to why it'd be used there in a while, but really from a security perspective, what's your thoughts?
Sure. Okay. So let's look at pure security and let's make privacy, which is, you were sort of on the borders of that. Let's make that the next question. Okay.
Okay.
So the answer is the security in a blockchain comes from in part from cryptographic encryption. So the central bank digital currency that China has designed uses lots and lots of cryptographic encryption. So the encryption, the concept that you need to have keys to unlock what's going on there, that's similar. What, of course, blockchain adds to that is blockchain for Bitcoin tries to deliver a concept called a public blockchain. In other words, trust is on the chain, on the ability of the blockchain to confirm things, because anybody, including crooks, can use it. Now, realistically, and this is not just for China's central bank digital currency, you're going to see the European Central Bank, anybody else who builds one, central banks really are not big fans of public networks. They like private networks. In other words, Bitcoin's original sale point was that anybody can jump on and anybody can use this to transfer money. That's no longer the case. If you want to use Bitcoin in the EU, in UK, Ireland, US, you have to pay taxes on it. You have to transfer money from fiat into Bitcoin through an exchange. That exchange asks, who are you? Where's this money going? Are you a drug runner? Are you doing bad stuff? Right? So the original days of Bitcoin, where it's free, everybody can use it, they're already gone. Not so with some developing nations, and there's a large part of the world that would disagree with that. But the reality is, if you want to change the dollars, if you want to change the currency around, you have to go through an exchange, and most exchanges know who you are. That's their governments require that for them to operate in whatever country. Okay, so central bank digital currency, public blockchain, anybody can use it without saying who you are. Does that sound like something that your central bank, whatever country you happen to be living in, would like? No, they don't want that. They really don't. It's not just China. People are like, oh, that's China. No, guys, come on. Every central bank wants to know who's using their money. If money is going to be easy to transfer from one person to another, it scares the living daylights out of central banks. They want to make sure you're not money laundering and doing bad stuff with money. Okay. So they want to know who you are. in order to authorize that you can use the currency. That's what's going on. So back to China. So for security, China does not recognize a blockchain system because of the speed. They do recognize the use of advanced cryptography to secure the currency. And they also recognize that rather than having full public access, in the sense that anybody anywhere on the planet can get it. When I say public, I'm not talking about China's citizens. Yes, Chinese citizens can access it. Mm-hmm. What they're not saying is that somebody in a third-party foreign country can suddenly get their hands on the central bank digital currency of China and start to use it. You have to be in most cases, you have to be a registered user. True that in China, you can use it without a bank account, mm-hmm. but it is not going to be available for somebody in a third-party developing nation to grab the digital currency of China and start using it between themselves. Mm-hmm. So that's a lot in one piece, but the security through encryption is included. The security through having a trusted network of participants is also another security feature that normal blockchain, normal cryptocurrencies do not have. So there are bad actors who want to use Bitcoin. They want to hack it. They want to get into it. And they're allowed to do that, not just to transfer money, but to hopefully, they want to steal stuff. I guarantee you, Bitcoin's had many attacks, right? But the China's central bank digital currency, because it uses trusted parties, will not be subject to that level of attack. So those are two areas where security is fine.
Is there any threat of the government in China using this data against people that are locally? So at a level of, looking closer at them, to analysis, to check closer into their payments. Is there any of those concerns, a data concern, that they may be looking inwards, or should that be eliminated?
That's the biggest criticism for China's central bank digital currency is from abroad and from the West. And people from the West ask exactly that question. It's China. They're spying on me. And I have two answers to them. Actually, three, I guess. First of all, are you so sure? Do not be so sure that the way that you pay for things digitally, nobody's spying on you. So first 100%. Thing to recognize is that when you use a credit card in the West, dip or swipe or any form of Apple Pay, which is all built on credit card rails or credit card transport system, there are 7 or so companies that basically sell your data to data brokers. Now, people say, well, it's anonymized data. And here's the 7. Your bank sells the data. The bank of the receiver of payment sells the data. In between, there's the credit card company, Visa, MasterCard, they sell the data. Then there's the company that transports the swipe, because believe it or not, just because maybe Barclays or whatever is on the name of the credit card swipe machine, there could be a different company transporting it. Then there's a fintech company sometimes involved, they'll sell it. So you've got all these different people who have access to your data. So people who say, well, Apple told me that Apple doesn't sell my data. You're right. Apple isn't selling your data. Everybody else involved in the process is. So first thing, remember, payment in the West has surveillance on. Edward Snowden right now is sitting in Russia in exile because he revealed how the NSA for the United States was looking at Visa and MasterCard transactions, mostly focused on money going into the Middle East. Okay, that's years ago already. That was not his primary revelation, but that was one of the things that he revealed. And he also revealed that the SWIFT payment system was being monitored by the NSA beyond the amount that they are allowed to. There's a certain amount that they're allowed to, and then they went above and beyond that. Look, you can look this stuff up yourself. I have it in Cashless. I have the stories, but it's real. So number one, payment is not so private in the West. You think it is, but you live with an illusion of privacy. Data brokers can connect your, quote, anonymized data with you in all of about 2 or 3 steps. It's relatively painless for them to do that, okay? That's not me. You can do research on that on your own. Okay, so number 2, central bank digital currency in China used by Chinese people. AliPay and WeChat Pay are tremendous systems. I have nothing but goods to say about them. They also, however, collect a lot of data. When you compare central bank digital currency with the existing payment systems in China, it turns out that your data is a lot more private on a central bank digital currency than it is on AliPay and WeChat Pay. In other words, you give less data to third parties with central bank digital currency. So if you're a Chinese person living in China, central bank digital currency is a net improvement on your privacy over the corporate payment systems that are currently in use.
Makes sense.
Done.
Makes
Next
sense
one.
because they're not selling it.
Because they're not selling data. Okay, now let's get the third one. Ready? Third one. I want to use central bank digital currency to buy, I always use the same thing, a container full of refrigerators from China. So I'm an importer and exporter, and I am in a developing country somewhere. And I am part of the Belt and Road Country Initiative, BRI, Belt and Road Initiative, right? Which is a big Chinese program to develop developing countries, build infrastructure. So in that case, the importer is saying, I want to buy a container full of refrigerators. If he normally buys it, he would have to take whatever his currency is, change it to dollars, send it to China, change the dollars into RMB at a Chinese bank in China through the banking system, and then buy the refrigerators. In the end, by the time you make all those steps, it's no secret who's buying a container of refrigerators in whatever developing country you're in. If you do it with a central bank digital currency and you say, I want to buy refrigerators, and you buy them, you go from your native country likely directly into buying digital RMB, transfer that money directly to the refrigerator sales shop, and you're done. And it takes all of 10 minutes.
It's frictionless. It breaks down those barriers that would have originally been there.
Absolutely. It's frictionless. And as far as the importer-exporter goes, there's no difference to him. If the Chinese government wants to know how many containers full of refrigerators were sent to your developing country, I'm sure they can dig that data out of the banking system just as well as they can dig it out. I mean, that's look, and that's not like secretive. The US government compiles trade statistics. They want to know how many of this category of goods was sold to wherever. They dig that stuff out of trade statistics that are partially provided to the Federal Reserve and or other multinational organizations, and they get that from the banking system. It's so it's not unique to China.
100%.
So,
yeah.
First case, you're being spied on. And I'm sorry, I don't mean that. It's look, don't get all bent out of shape about that, but be aware of it. Be aware that data brokers are a reality. and they are why you get free services for stuff. Stuff is free because you are the product and your data is sold. That doesn't, I'm not trying to scare you away from using your credit cards or Apple Pay or Google Pay or whatever. 2, for the person using it in CBDC in China, they're net positive, better for their privacy. And number 3, for importers and exporters, no net change for them. Now, somebody says, oh, but I want to use China's central bank digital currency to pay from me to you, and you're in Ireland and I'm in the United States. Well, you're not going to use it for that. Don't confuse cryptocurrency or Bitcoin, where you can go on these networks and start passing money back and forth. Mandatory for using central bank digital currency is a Chinese bank account. An importer or exporter will have that. You're not going to have it. If somebody in the US right now is going to have that. So the 4th case, which is person-to-person transfer from foreign countries that are not China, not happening. Okay, so there we go. That's the privacy issue for central bank digital currency. And most important of all, remember, it's not a cryptocurrency. It's a closed network. You have to be allowed to use it.
And that makes a lot of sense, especially when you're saying on the interchange, trying to get some sort of transaction on a peer-to-peer basis. Like, the data is already available. It depends on who wants to mine it. It doesn't matter if it's a startup, if it's a software company, or the government. It's if they wanted to mine the data, it is readily available. You made a really interesting point about the Belt and Road Initiative, which kind of feeds more into the global network of central bank digital currency. So, especially the Belt and Road, which is essentially improving infrastructure across a lot of developing countries in Africa and beyond. If there's a scenario whereby people can use the Chinese-backed central bank digital currency, as well as if this was rolled out in the EU, do you see that as a longer-term strategy whereby this network is improved and we now have some sort of payment structure rolled out that's agreed among multiple different governments, essentially? Is that a likely scenario, you think, longer term?
Absolutely. And look, the key thing that you said, and that's a really great question, and you nailed it, because you said agreed. Okay, so here's what China can't do. China just can't say, okay, world, go use the central bank digital currency. Not going to happen. All right. Central banks have what are called currency swap agreements between central banks. That means the US and the UK, the US and for pound sterling, the US and European Central Bank, they have an agreement. They say, we can swap currencies back and forth. We recognize your currency, you recognize ours. We'll send stuff back and forth, right? So what China is doing already for normal currency is to say, okay, we want currency swap arrangements with more countries. So if you are a Belt and Road Initiative country, a BRI country, chances are through the course of that program, you had what's called a currency swap agreement signed. And those currency swap agreements will be amended to include digital currency. The idea being the digital currency is the same as regular money. You'll put it in the same, you'll add it up the same way, you'll make accounting for it the same way, but you can monitor what's happening. The idea is that, ready? So who knows about Libra coin? Facebook, Libra coin, the first generation before it became DM coin. The idea was send the currency out there, let anybody who wants to use it, no problem. And economists became genuinely concerned. They said, look, developing countries where the currency is weak, if you allow people to suddenly buy Libra coin and they like that better than the local currency, you could destabilize these nations, taking a weak currency and making it weaker because people want to sell it and buy Libra coin. So Same thing. China's digital currency can't just be let free in developing countries for people to suddenly rush to buy. Mm-hmm. It has to be controlled through the central banks, who will limit the amount of importers or exporters, who will control to some degree what happens so that it doesn't destabilize anything. And that's all up to China to make an agreement with the local central banks to figure out how they're going to use this and, what makes sense. And that will be different from one country to the next.
And that's a difficulty as well,
Well, so here's the thing. It's setting up a new way to pay. It's like building new infrastructure, building new bridges and roads. You got to invest some time and money to do it, and you hope it pays off in the long term. So that's where China is going with this. I will tell anybody out there, when the central bank digital currency officially launches for domestic use in China, it'll still take a couple of years for it to start being used internationally. They're building those systems now. Don't expect China's central bank digital currency to be an overnight international success where, boom, it hits the market and everybody starts using it. It's going to be a long, slow process for internationalizing the digital RMB or the digital yuan.
All rollouts take so long, The very last point I want to touch on is the crackdown on crypto in China and your opinion on it. Well, we only have a couple of minutes, but with all the agreements that need to be there for a central bank digital currency and the security issues, the energy issues that are around Bitcoin at the moment, do you see a scenario where that could become prohibited, mining Bitcoin, or do you think these are just scare techniques, or is it possible that it could be removed from the economy?
Well, so for the big fans of Bitcoin, I say this, and they're going to be laughing. It's pretty hard to remove Bitcoin from anybody's economy. If people want to use it, you're going to use it. It's a public network. It's very hard to stop people from using it. However, mining's days, Bitcoin mining in China, where at one point China mined up to 75% of what's called the hash, meaning China supplied 75% of the computer power that goes into mining Bitcoin. Those days are gone. It's down to like 50% over the last 3 or 4 months. And you can expect it to go lower. At one point, China's Bitcoin mining consumed a full more than or around 1% of China's electricity generation, which is a problem. Consumption, and Bitcoin is consuming a full 1% of China's energy output. Worse is that China's Bitcoin industry has been attached with a lot of shady dealings, all right, and people being robbed. And what culturally you can't understand is that, okay, in the West, in US and in Europe, it's like, look, you buy Bitcoin, it's on you, it's your problem. You lose your money, don't come running to us. China's a little different. When it comes to financial scandal, people being robbed or financial problems, there is a greater sense of the population of China that the government's job is to keep them safe and keep them protected from bad stuff. Now, that goes back to a different China when things were far more controlled by the government than they are now. But China, the government is concerned because it sees all these people buying and selling Bitcoin. And unlike what many people think that when Beijing, the capital, says to do something, everybody in the country, including all the banks, do exactly what's ordered. And the reality is, when you get away to the more remote provinces, banks that were told by Beijing regulators, look, don't deal in Bitcoin, we're actually doing that. So China cracked down heavily in the recent months over Bitcoin because of the desire to reduce electricity consumption, the sense that Bitcoin did not provide a real service for the real economy of China. Remember, you are allowed to buy and own Bitcoin in China. You can own it. It is a property, no problem. But you're not allowed to make payment with it. In other words, if you want to buy a cup of coffee and you want to pay in Bitcoin, you're breaking the law. So there's actually no use for Bitcoin in the real economy because it's outlawed to actually buy stuff with it. So the central bank said, okay, this is a big electricity use. It is not contributing to the real economy. It is contributing, to a speculative boom. And we feel responsible to, in part, help people to not buy this stuff because we're afraid they're going to lose money. And then the last one, and this is the one people know, is that it was contributing to black market funds transfer, people taking money out of China illegally and sending it out with Bitcoin. Now, it's up to you to decide whether that's a good use or a bad use of Bitcoin. But it's not just China, it's India, Malaysia, lots of other countries are really upset about this. They have currency export rules. And if you can break all these rules with Bitcoin, it's not just China that gets upset. It's a lot of countries that get upset over this. So those are the three reasons why there's been a Bitcoin crackdown in China. And, if you look at it from China's perspective, you can't really blame them all that much. They got black market money flowing out. They got a large percentage of the population risking what they would think is financial ruin. And then you got all the electricity consumption. For them, it's three strikes. It's really three bad things all in one. And, they're like, we had enough of this.
I get you. It's going to be an interesting couple of months to see how it all unfolds and just the impact on price or just the impact on the ecosystem. So, Richard, I'd like to say a massive thank you. We're out of time, unfortunately. I felt I could have kept on going with this for a couple of more hours. I want to come back to it for sure in the future.
One thing I want to get across to everybody. Ready? It's going to take one more minute. This is a shared future. We're all going down the central bank digital currency route. It's a good future. The people who are telling you that this is dystopia, this is horrible, this is the worst thing that could happen, don't buy into it. You're going to have new freedom with your money. In other words, your money will not wait 3 days. It will not be in your bank. It will not require a third party to pay them to move your money. You will have this, you'll live in a new world, the world that I live in China right now, where my money is what I call hypermobile. It goes wherever I want it to go, whenever, for free. And that's a good future to live into. And with it, you're going to get new digital services. The fintech of today will seem like a Model T Ford car once you see what fintech companies can do with the digital currency.
Thank you very much, Richard. I really appreciate that. I want to come back and do this again in the future, go through a real deep version and go into the tech of it. But for today, I'd like to say a massive thank you. I really appreciate it.
Darren, it's absolutely my pleasure. My book is available on Amazon. I have to get the last word in for advertising.
Of course.
Connect with me on LinkedIn. Connect with me on Twitter. I talk about this all the time. Nothing that makes me happier than for young people to join in the conversation.
Thank you so much.